What's good, YouTube? It is your boy Go to Trades, and I'm back with the Straw Hat Trading Community, and we are going over the weekly analysis of the stock market this week. So it is important every week to check this channel to see if, well, especially on the weekends, every weekend to check this channel. I'm sorry I have my dog in the background. Disclaimer, my dog, I cannot control her. She's going to be barking in the background. If you do hear her, I am sorry. She's not gonna be barking all the time, I promise. But anyways, it is important that every weekend you're checking this channel, because I'm going to give videos explaining the sentiment of the market, right? The breadth of the market, just what I expect the market to do, what I expect to happen. Maybe you guys are gonna set some key levels so you guys can know that if this happens, then this is gonna happen. Okay, so it's important to kind of like gauge like my analysis and your own analysis so you guys could make informed decisions in the stock market. But guess what? I'm not a financial advisor. This is just what I think and all that good stuff. Okay. Anyways, I don't want to make this a long video. This is my first time doing this, so I'm kind of speaking a little bit fast, and hopefully I can explain everything pretty nicely so you guys can kind of get where I'm coming from and just understand where I'm getting at. Some people think I'm pretty good at teaching things. Some people think I'm terrible. Public speaking isn't my biggest thing. I'm an engineer. I am not a political man. I'm not a news anchor. I just make charts. Okay, so I just want you guys to kind of see where I'm getting at, where my head is, and yeah. So every week I like to look at the S&P heat map so you guys can kind of see like what like where institutions are, what they're doing, and where they're rotating in and out of the market. Institutions, they will kind of give you a hint of what is about to happen, okay? And just to kind of analyze this stock map, I think that it's pretty mixed, right? I see a lot of tech is really green. Finances really green. To start the year, finances were actually pretty red. Now they're kind of getting back some gains. Health and technologies looking pretty weak, but you still have some decent names holding you up on the tech. But most notably, low key, energy. Energy is actually looking pretty good. Whenever energy is getting love, this usually means that we're looking more defensive, right? Healthcare, energy, stuff like that. That means more defensive. That means institutions are hedging, and they are not, like, they have more of a risk off trading style. So that's pretty important to note, right? So right now they've just been rotating into tech, finance, energy, manufacturing, stuff like that. Maybe rotating out of consumer traders such as like consumer services, durables, non-durables. So I say all that to say this, right? Institutions they're hedging. They're still playing these tech names, but they're also hedging their bets into these defensive names. So when we start seeing stuff like that, that is important, especially because this week is a very important week. This is probably one of the most important weeks of the year, and I'm going to explain right now. So this week we have a lot of data coming out, and it's major. We have on Tuesday, we have consumer confidence, we have job openings. On Wednesday, we have the Fed interest rate decision, and I think that this is going to be the big shaker, right? This closed out the week. This is the 31st, so on the monthly chart, we're going to close out the week with a Fed rate decision. If you guys don't know the Fed rate decision, it's basically what the Fed is going to do with interest rates. This moves the market. So I'm not too sure where they're gonna head, whether we're gonna cut rates, if we're gonna raise rates, if we're gonna pause. I'm not sure. I don't care. I trade off of technicals and reaction to the fundamentals. I don't trade off of fundamentals or macro. I don't ever do that. I trade to the reaction. So it's important to kind of be wary of this day, 2 p.m. Wednesday, the 31st. Also, Thursday, we also have initial jobless claims, very important. Non-farm on Friday, unemployment rate, all of this is very important. It's going to move the market every single day other than Monday. We can expect Monday is going to be super boring. I'm probably not going to be in the trade room on Monday. I don't have anything to do on Monday. It's going to be boring. Okay. So yeah, it's a lot of news going on. Tuesday is gonna start it off. Wednesday we're in the thick of it. Thursday and Friday we're gonna see where the market's gonna generally move, what the sentiment is going to be for the next few months. Okay. Next, we have earnings. Earnings super important this week. My notable earnings for this week is going to be at close of Tuesday, which we have Microsoft and AMD and Alphabet, which is Google. Super duper important. This is gonna be the market movers, especially for tech. If you really want to know about tech names, if you really want to see where the tech sentiment is, this is gonna start you off. We got Microsoft, which is now I believe is now bigger than Apple, and if Microsoft can beat and we look good off of that beat, then we're gonna see blue skies and breakouts. AMD right now, AMD may not have good reactions if they don't smash earnings, mainly because Intel just they made their earnings was pretty good, but their guidance wasn't, and because of that, massive declines on chips. I'm gonna kind of analyze more on chips later, but this is very important, very, 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 very important because chips are starting to look weak. Google has been doing a whole bunch of nothing. Well, it looks good. It has been making some moves, but when I say a whole bunch of nothing, I'm saying when you look at the whole Mag 7, it hasn't been doing like the crazy moves as Apple, as Microsoft. So I'm expecting Google to do something. I hope it does. The end of close on Thursday, you have Apple, Amazon, and Meta. Meta, I believe, is going to shake the market. I really like what Meta's doing. I believe is going to be a beat. I believe that Meta is going to do very well. That's just what I believe. My speculations. I could go on and on and on about what Meta has done and what they plan on doing, but this is not what this video is about. If Apple actually breaks and you get some forward guidance and you look good, you're gonna break out. You have a cup and handle on Apple right now, and we could kind of go over it later. Beginning of day on Friday, we do have some oil names. We have Chevron and Exxon, some energy. So that's also pretty important. Now, if you guys are enjoying the video so far, make sure to leave a like, comment. Let me know how I'm moving. I'm trying to move a little bit fast. If it's too fast or it's too much, let me know. I need some feedback so I can make these videos better in the future. I don't know how this is going to be. I don't know if it's going to be a good video or not. Hopefully it's good to you guys. If not, I'm sorry. Anyways, let's keep moving. So because we're on the subject of macroeconomics, I do like to look at the dollar and look at the U.S. bonds. Before I actually get into charts, like the thick of it, before I get into tech names, chips, and indexes and all that good stuff, I like to look at the dollar, I like to look at the bonds, because if you guys don't know, very simple. I'm just gonna keep it very simple. When the dollar goes up, stocks go down. Okay, very, very simple. And I could kind of give you guys a back test of that, right? So if you go on your charts, if you look at here, look at this trend line, this downward trend line of the dollar, right? So the downward trend line, if you were to see at the end of October, if you look at the end of October on the S&P, that marked the bottom, right? That also marked the top on the dollar. So when you declined on the dollar, you rallied on the S&P. So that's just how it goes, right? I can put it side by side so you can see it. The end of October, right? The end of October, you can see that we rejected on the dollar. We started breaking down, and what happened? We started rallying on the S&P. Rally, right? And then once we start seeing strength on the dollar, we started seeing a little bit of selling, right? So right here, around the end of November, we started seeing the dollar find some strength, and we started seeing some selling on the S&P. Now the selling wasn't as bad as down here, but we did start seeing some selling. Once that dollar broke down again, we seen breakouts again. Rally. Same thing. Consolidate on the dollar. Consolidate on the equities. What happened? You break down on the dollar again. Rally. It's a system, guys. It's super simple. It's if you don't follow the dollar, I don't know what to tell you. The dollar literally gives you the sauce. Okay, so that is important to note. And yeah, so what I like to do on a dollar, let me just go ahead and go back. Yeah, what I like to do on a dollar on shorter time frames, and when I mean shorter time frames, I mean on a daily and a weekly. I like to see the daily trends, right? So on a daily trend, I have a trend line that is forming a rising wedge, right? If you're not familiar with a rising wedge, it is a bearish formation. I might make a video of all of the I might make a video of all of the trend line pattern stuff, so you guys can see like what is what, and you guys can kind of memorize it. It's super easy to memorize. They all look pretty darn, I guess, depictive. So it's pretty easy to memorize, especially when you're actually in the market. You can see it all the time. So it's a pattern, which means it happens all the time. And, you know, the first time you learn it, it might just be a lot, but once you keep doing it, it looks good, right? So getting back on track with the dollar, toward the end of December, toward the beginning of January, we created like this base breaking out of this downward trend line that we started in October, and we're creating this formation that is starting to get skinnier and skinnier and skinnier as you ping pong up and down. That is the rising wedge, and usually at the end of the rising wedge, you hit major support. Major resistances, and your major resistances here lie around 104.2, 104.7, and after you hit those major resistances, you poop, right? So if you see a poop after that, so mark that on your charts, set an alert at 104.2, 104.7. If you see your charts on the dollar hit that, this is where you would want to probably get active into the stock market. This is probably where you would want to start buying calls or going long, because I do believe we will be breaking out and breaking down into previous supports, which lie around 102, 101. Okay, so if that does happen, I believe we're going to see the same rallying formation that I just mentioned. So that is very, very important. Right now, though, I do believe that you're setting up something within under the hood on the S&P and the NASDAQ, QQQ, and the dollar is kind of hinting that, right? We see it kind of like a bull flagish formation accumulation right here on the support. I do believe that we're going to rally on the dollar. As we rally, equities are going to go down, so we rally up, right? That means that we rally up on the dollar, right? We rally up on the dollar, and then equities end up going where? Equities will be going down as you rally. So look, so dollar goes up, equities go down, right? But once we hit these support levels here, once we hit these resistance levels here, then I believe things are going to flip. Where, again, I believe the dollar is going to go where? The dollar is going to go down, right? Let me draw it down right here. The dollar is going to start going down, and equities are going to go where? Up. I don't know when it's going to happen. I'm not sure. I can't really guess how that's like when it's going to happen, but that I do believe that's the formation that is setting up right now. So it's important to just wait and see what actually happens. Like I said, I do believe we're starting to get toward the end of this pattern here. And toward the end, I do believe we end up crashing down. Okay. So that's the most I could give you. So set your alarm 104.2, 104.7. That around there is where I would start setting up some longs personally. Okay. The US 10-year, kind of the same thing, maybe a little bit more bullish on that. And same thing when you're bullish on the bonds and bullish on the dollar, you're bearish on equities. So I'm not too sure what's going to happen here. You do look a lot better on US bonds than the dollar. So maybe you might just keep grinding up. But here are the levels. If we break above 4.3%, and we actually break out of this little channel that we're in. Let me go ahead and zoom out so you can see. So this long-term channel, we're basing right now. If we break out of this long-term channel here, if I erase this, so if we break out of this long-term channel, and we actually break above 4.3%, and we start making our way back up, equities are gonna die. That's just what is gonna happen. So set your alarms, set your alert. If we actually break and start trending up, higher to 4.5% and all that good stuff, we're going lower. So that is very important. And that's really it. That's really the analysis. I don't want to spend too much time on it. If you guys have any questions, or if you guys want me to go more in depth on it, like in a future video or next time, I will, because I will be covering this every single week. So yeah, I will do that. Just let me know in the comments, okay? Next, we have indexes, right? So indexes, if you guys don't look at indexes, I urge you to. So indexes, the major 4 indexes in the U.S. market are the NASDAQ, the S&P 500, the Russell, and the Dow Jones. These will make your life a lot better, right? Make your trading life a lot easier. So usually when you're looking at NQ, that's the ticker for it, NQ. When you're looking at NQ, this kind of tracks more of like growth names, like the ETF QQQ, triple Q, or when you're looking at the ES, which is the ticker for it, that's like tracking the SPY. That's like the general market. When you're looking at RTY, you're tracking the Russell. That means small, mid cap, stuff like that. When you're looking at Dow Jones, you're looking at industrial names, your transportations, stuff like that. Okay, so this is like the major markets that you want to look at, so you can kind of see like the whole sentiment. So if you don't know, if you've been living under a rock, the NQ, and I like to look at them in the bundles, like 4 bundles like this. If you guys want me to zoom in in the next video, I will, but I like to look at it on like a 4 cube type of thing, right? So if you've been living under a rock, the US, the NQ has been on an uptrend since the end of December 22. So 2022, at end of 2022 to like last year, beginning of last year, we've just been going straight up, right? So here's a trend line for it. Every time we hit this trend line, this lower support, we end up bouncing to this higher resistance. It's super simple. It's a ping pong. So we come down here, we test resistances, we come back down, we test resistances. So right now we are trying to what? Test resistances. Right now last week we actually broke above our all-time highs that we made in November of 2021. We tested that and we end up rejecting, right? We broke above, end up rejecting, and right now we formed a massive cup. I'm going to tell you why that's super important. I created a watch reaction level, which was at previous highs, which was what? 176963. So that was our watch reaction level. If you looked at that, if you watched that reaction and you like played the downside towards it, then you know your stop would have probably hit if you went over 17.8, which you did not. And no, you came right back down and you are testing 17.5. So that's a pretty good trade. If you've seen that in the trade community, congratulations to you. So yeah, that was the watch reaction level. Still a watch reaction level, but I'm going to erase it. Right now we're basing here at last week's highs, and that's what I'm watching right now. You want to stay above this level here, 17,470. If you stay above 17,470, you are bullish. If you break below, you are in a yellow light territory. That means you need to just chill out, see what happens next. If you get confirmation down below into red light territory, then you can start looking at some shorts, some puts, right? 17, this is like 17.1, 17.15. That's like, if you break below that, then you are red light. That means that you should not be making calls until you find some type of structure. I probably didn't mention it yet, but these are extreme zones, right? When you break into this channel right here, this dashed line in the red filling, you are in extreme zones. This is resistance, right? These extreme zones have an upper extreme and a lower extreme. So your upper extreme is way up here, right? Anytime you hit upper extreme, which we hit over here in July, anytime you hit upper extreme, you see major selling, and 9 times out of 10, you're going to test your lower support. You know what I'm saying? So that is why you have extreme zones. So that's what I'm looking on the NQ. ES is pretty similar. Same reaction here. You do have a watch reaction here at 50.28. You haven't gotten there yet. So ES still looks way more bullish in my opinion than NQ. And whenever NQ looks weak but ES looks strong, that means that there's always more continuation. That means you're still bullish. There's always going to be more continuation. When ES starts looking bad and NQ starts looking bad, that means like, okay, we should be scared. But when it's just NQ and ES is still holding, I believe that there's a lot of bear traps in the market. On your charts, put this down. Write this down because it's very important. If you stay above 48.70, you are bullish. So 48.70 is right here. If you stay above 47, you are bullish. No ifs and buts, you are bullish. But if you break down below and you break down below 48.40, but you are above 47.45, then you are in yellow light. So if you break this area, which was where we were consolidating at in the beginning of January, also throughout December, if you break this zone and you come back down and you're still above this area here, this 47.45 area, then you're just yellow light. But if you break down below 47.45, then you are in red light, and I do expect you to test 46.60, which is right here. Okay, so mark these levels down. They're very important levels. I won't go too in depth with it. I think it's super simple. When you have a super simple story, it kind of keeps everything simple. This is a super simple template for you to watch and monitor. This is very important, okay? So I don't like to go too in depth with these two markets. I like to trade off of NQ and ES, but it's also good to know what's going on with Dow and going on with RTY. So you got your small mid cap names. You're finding life here. You are making some type of cup and handle here. So cup and handle, that formation is where you kind of get like a dip. You get a dip, you start finding buyers, you curl up, you reject up here into your resistance levels, you come back down, you retest like previous support levels, which is like around here, you retest it, you curl back up, and you break out. It looks like a teacup, right? It's like a teacup, and then you got your handle. So that's what you're looking at right now. That only happens if it actually falls through. If it doesn't and you break back down, then you invalidate it. But right now, I'm not interested in RTY, and I'm not really interested in the Dow Jones. I mean, you look really good on the Dow Jones, continue making these highs, but I am not too interested. Anyways, all right, so moving on to tech, I have like this ETF, well, not really ETF, but a bundle of stocks that I put into a ticker so that I could kind of look at like the big tech names. And a lot of people call it the Mag 7 or Magnificent 7. I don't really call it that because mine is a little bit different. I have 8 stocks instead of 7, and it includes Tesla, Netflix, Apple, Amazon, Nvidia, Microsoft, Google, Meta. I believe that these are the biggest names, and these are the biggest movers of tech. So I like to track like these names instead of just tracking like QQQ or XOK. I like to track these names, and then I use XOK and QQQ as like what's the word? Like a subdomain of this. Okay, like so I prioritize the big techs. If the big techs look weak, then everything else can look weak, right? So that's what I like to do. It's super easy to do if you guys want to learn. Basically, all you got to do is just put like Tesla, put a plus sign, and then you put your next stock. So you could put SPY if you want to. You could put what? Let's put NQ. You could put NQ. Like you could do all that, and then it creates the bundle for you. Simple, right? It's pretty cool. So that's what I do. And this is what I monitor, right? So here, this one looks okay. So you broke into your extreme zones here. Your extreme zones look kind of wide because it is. Remember, it's it's big names in here, so your extreme zones do look kind of wide, right? So you broke into your extreme zone and you kind of made a base here. Looked really good. You hit all-time highs, and now what's next, right? I don't know. You hit all-time highs, and you reject it instantly. You look kind of like how QQQ looks. You look like how NQ looks. You look how SPY looks. You made these highs, and you start rejecting. So I'm not really too sure what's going to happen with big tech names. I mean, you have big earnings, so I believe that this week is going to be the week that we kind of get a direction. Are we going to retest? If are we going to retest like these, like the lower extremes? I would like that, because if we do get a test of lower extremes, like something like this, like we come back down and we make a base here, I would love that, because I would be a buyer here. I'm not gonna lie, I'll be a buyer here. Maybe we retest previous highs. If we actually break above, then we have potential of going higher. We have potential. I'm not saying we will, but it's a potential thing. So I don't mind taking that risk, and that's what I would be looking for. But if you end up breaking down, and then you retest and break down again, I do see us trying to test support here. I do see us trying to test some type of support here. Same thing with XOK. XOK, you rejected off the week. This is a nasty rejection. I believe that to open the week, we might open up around here, come back down. If we do come back down, I'd expect buyers, because this is where we consolidated, just to retest this area that, you know, we made troubles with, trying to break out. What was this? This was in the beginning of January. I do believe if we retest that area, we'll come back up to retest previous highs. Our trend is still what? It's still bullish. We're still going higher. If we do get a retest here, right? This 194, 195, I expect to see a lot of buyers stepping in. Your XOK names, like the major names like Apple, Microsoft, makes a majority of the XOK. So that's where I would want to be playing, Apple or Microsoft. If we do retest 194, super important level. Same thing with QQQ. We look bad ending the week. This looks pretty bearish. You got a shooting star. Oh, this was a shooting star as well. Very important. So shooting stars, when you get like a a body candle kind of like this, and you have a formation candle going up like that, like making like some type of action like this, is called a shooting star. A shooting star is very bearish. That means you have a lot of sentiment to the downside, okay? So next week, I can see us probably going down, testing this 410 level. 413 has a gap fill. If I go into the daily, you can see you have a gap fill on 413 around there. So this is where I expect buyers to try to hold you up, and I will also be a buyer there as well. That's what I'm looking for. Chips looking pretty weak. Chips, SMH, this is the semiconductor for chips. You rejected off of all-time highs. You're coming back down. This is the extremes. You broke out of extreme level, so you're super extended, and you're coming right back into it. So what I'm expecting here for SMH is, if you break back into these extreme levels, I believe you're gonna retest down here. I believe that you're gonna retest 170. Somewhere around 170 is where you'll retest, and I believe that is where major support is. If you break down below this 170, let me go ahead and make a horizontal line so you can kind of see it. Yeah, this is like your major, this is like your previous all-time highs. So if you mount this 175, like if you get some type of action like this where you break back in, you come back, and then you break back up, then you are super bullish. But if you come back down, you break, you get trapped in, and you break down again, trap in, and you just grind down lower, you're going to hell. Okay, well, I probably shouldn't say that. You're going down, guys. You're going to go down. You might retest this major support here. There's like major support everywhere. So you're not going to, I don't see us going really super down. I do think that like you're gonna get a lot of buyers that's gonna step in and try to hold up semis. It's a freight train. Like there's no like signs of it like really not going back up. Okay, so until you get those signs, and I'll let you know how we develop. Like you look good. Same thing with XSD, which is SPY semiconductor ETF. You are breaking down below from your resistance level, so you might try to test back support, but it's also notable to note this: you are creating some type of cup and handle. You have a cup, you're creating a handle, and if you break back up, then you're going to try to test support, not support, extremes here. Extremes lie around 251, so that is what I'm watching if you end up finding some type of buying here. Okay, so that's what I'm watching. And when I look at the stocks, it's another semiconductor ETF. You already rejected. I believe that the stocks look way more constructive than these two. I believe that the stocks is you're trying to retest support, so you're gonna probably come down, try to retest support, and break back up. I think that like you're gonna get some type of action like that. So 564 is what I'm watching around there. 564, 560, that is what I'm watching. I'm a buyer there, for sure. I'm a buyer there. Last but not least, let's look at the SPY, right? So SPY, again, here's your trend line. This trend line is the most beautiful trend line ever. If there was a trend line class, this should be a part of the class, guys. This is a pretty good trend line, right? So your trend line been extending all the way from October 2022, and here's the SPY, right? You every time you hit the upper extremes on SPY, you end up breaking down. So why am I saying this? I don't know if my whole sentiment has been bullish or if it's been bearish throughout like this whole video. I feel like it's kind of mixed, and that's on purpose. The stock market is pretty mixed right now. I believe you're going to go higher for sure, but there's going to be some bumpy roads, and I believe right now we've hit that bumpy road. I believe right now we're looking to probably get some type of pullback. And if we don't get a pullback, maybe some type of sideways action, because the S&P right now is wicking off of extremes. Whenever you wick off extremes, like you're going to go down. Very important. It's kind of like the ES and the NQ. It's hard to kind of guess what's going to happen, but here, right? If you stay above 480, which is 479.80, if you stay above that, you have the green light. You're bullish. But if you break below, you are in a yellow light. So if you break below here, you are in a yellow light, right? But confirmation for more downside that you're actually going to test extremes would be if you break down below 458. 458, if you break this is previous highs from July. If you break this, then you're going down. For sure, you're going down. You will be going down. You're going to test your lower extremes. You're going down. Last but not least, let's go over some names, some individual names. My favorite names to go over right now would be Apple. Apple, you're creating a cup and handle. I think you look good. This is the trend line right now for Apple. You try to test these upper resistance levels. You broke down. You came and test support. You broke back up. A simple cup and handle here. It's like a mini cup and handle. So that's what I'm watching here on Apple. You look good. It's super bullish in my opinion. If I were to play earnings, I'd play it to the upside. I'm not playing earnings, but if I were, I'll be looking to the upside. I'm not sure how it's going to go prior to earnings, if it's going to be more selling, but it's very important that, you're just watching the action on Apple. Netflix, you look super bullish. I've called Netflix already. I told everyone that your confirmation was above 490, but your entry was here at 480. This was a play that I've been doing all the way like from December, and my very last play was the earnings. We played earnings and we we rallied all the way from 490 to 480. So it was a very good trade, awesome trade. I loved it. I still believe that we still have room to the upside all the way to 600. I believe we're going to test all-time highs, but it's a matter of when. So we just got to be patient. We're wicking off of this level here. I'm not too sure where our entry point would be, but my best guess is to wait to see how earnings develop, and then we could go from there. Meta, this is my favorite stock right now in terms of bullishness. I believe Meta, out of all of the big seven, I believe Meta has the most potential. Don't ask me why. I'll probably make a video about it in the future. But I like Meta. I'm sorry about that. Right now you're just grinding higher. You've been accumulating off of last time. Look, this is July, right? Since July, when you hit this resistance level, all you've been doing is accumulating, right? You've just been accumulating, going sideways for how long, guys? For 1, 2, 3, 4, 5, 6 months, you've been going sideways, right? Just to hit support and then rally up. That is super bullish, right? That is super bullish. That means institutions don't want to give up Meta. And there's a reason why. So what I'm looking for with Meta is just a retest, right? So we broke out, and this was another one I called. I've called this around like mid-December. I said that Meta, if you got in around like 343, you go long on it, you're gonna probably get to 381. We end up getting there prior to earnings. So like I do think Meta, if I were to play any of these names, for sure I'd play Meta. So I do want to see a retest, right? So some type of retest coming down this week. If we could come down to like 384, I'm a buyer. For sure, I am a buyer on Meta. I will buy Meta at 384. I love that. 384, we have room from 384 all the way up to 450, around there. This is where I'm watching. So I think that this has a lot of potential to develop into a very good trade. So you guys, so I just gave you guys free sauce. So last but not least, I have Microsoft. I do like Microsoft a little bit here. We did a retest. We broke all-time highs here on Microsoft at 385. We broke down, came back up, mounted 385, and we just rallied. I love Microsoft. I think Microsoft, just like Meta, super duper bullish, one of the most bullish stocks of the big seven or big eight, whatever you want to call it. And I believe that Microsoft has room all the way up to 500, around there, 500 to 470. If you were to zoom out like I'm doing right now, even though you're at 400, you still have so much damn room on Microsoft. So if Microsoft beats, just believe you will see 480 or 455 around there get tested. I love Microsoft, and I think that's a very good move if you actually go long on Microsoft. But it just comes down to just being patient and actually having a pretty decent entry, right? So entry here wouldn't be bad. I believe the entry here wouldn't be bad. You already tested previous highs. You bounced off of it. You created that as like a support. So if you created a trend line here following that support, you would be pretty accurate. Like right here on Tuesday of January 2023, I said 2024, January 23rd of 2024, you bounce off of this trend line that I just created, and you just bounce. Like you bounce from what is this? 393 all the way to 407. That's a pretty good bounce in my opinion. So even tomorrow when you open up, you're probably going to open up around here, this 400 level. If you open up there, like that's not a bad, technically speaking. I'm not saying to do this, but that's not a bad swing opportunity on Microsoft. Even if you go long here and decide to play earnings, it wouldn't be a bad play in my opinion. Would it be terrible? No. Would it be bad? No. Would it be good? Would it be great? I believe waiting until earnings is over to actually play these, but technically speaking, you're super bullish. If earnings didn't exist, I'd play this. Instantly, I'd play this. So Microsoft, Meta, Apple. Love those names. I do believe that you have room, and you you look good to break out, in my opinion. I already told you guys about XOK and how XOK looks really good. If you were gonna play a name on XOK, it would be Microsoft or Apple. Microsoft might take the cake here. But that's it. If you guys have any charts you guys want me to analyze, follow me on Twitter. Follow me on Twitter. Go to Trades. It's right here. Follow me on Twitter. I'll be posting some charts maybe later tomorrow, maybe later today. Who knows? Not too sure. But just let me know. And yeah, just follow. Join the Discord if you guys want to keep up to date with my trades and what I'm looking at and all that good stuff. You get to see all my charts, weekly analysis, everything. Connect with some really good traders, some really good people. And yeah, if you guys enjoyed the video, make sure to like, comment, subscribe if you're new. And as always, I am Golden Trades. Catch you in the next one, traders. Peace.